Morning, everyone. It is Darren at Leviathan. And so let's have a look at what we have for you this morning. So, as a bearish start for the fixed income markets, as the only thing we care about at the moment is the Iranian war and the repercussions from that. And so, with oil up another $3.50, clearing the par handle quite clearly. Fixed income is down. We had the CPI out just about an hour ago, and that came in higher than expected, not by much that they put out, but still came in hotter. Comment from Googleby said that the report was worse than expected, and the worst part was the services inflation. We're all seeing it. I'm not entirely sure as to how much everything has even been factored in yet. That we've seen the fallout from the war and all the components of that. I know that the CPI out was for April, but I don't know whether or not there's priced in that all of that oil uh, gain. I'd have to delve it into it a little deeper. But as I said yesterday, one of the things has been that because of the war, that the economic numbers that we see out are not going to affect the markets in the with the normal. For example, CPI is normally the biggest mover of the month, more so than even non-farms. To give you an idea, the 36-month average Treasury range on CPI day is 26 and a half ticks. The 12-month range, which is seen as coming a little less, is still 19 ticks. And currently we have get this out of the way, a 9 tick range. So way lower than would be expected, and that is a systematic of the entire issue we have at the moment, in that the only thing that people care about is the war and the repercussions of that, and trying to find out what's going to happen, what is the fallout going to be, how much is this going to filter down to the economy, and what is going to be the end result. We're increasingly pricing in, as the market is getting used to the fact that the next move could be a hike, or like that's definitely if you're looking at the way that the market is pricing things in now. It's almost so let's see, 36. So you're looking at, what was it? Like over a 50% chance now that we have a hike by the end of the year. And so, yeah, that's kind of aggressive, and certainly not what Trump would like to see. But that's the way it is at the moment. With the rejection of Iran's proposal, and it looks like the ceasefire could be falling apart if it was even ever in place in the first place. We'll have to wait and see. Anyway, what else do we have going on? So we've had CPI, we had that. There was something else I wanted to talk about. Where are we? Pentagon officials reckon the Iran war cost at current is around $29 billion. An absolute bargain. I'm sure that money could have been spent elsewhere, but whatever, that's a story for another day. And yeah, that's kind of about it. So yeah, CPI. Yeah, you're going to see the S&P come in moderately lower. It's down 0.36%, coming in down 27.6. Fairly unaffected by everything. It's just in its own world as we continue to march higher to God knows where. I think I said yesterday, HSBC put their end of year target out to 7,650 from 7,500, and that's it. eBay and the GameStop takeover, which was rejected uh, last night. And Amazon reportedly changing how it builds data centers, aiming to redesign facilities to meet the demands of next gen AI. So a lot more water requirements wherever they're going to build. Anyway, as I've always said, better be lucky than be good. So good luck to you all and have a good day trading. We'll be back later on for a review of how the rest of the day went. Yeah.